Assalamualaikum warahmatullahi wabarakatuh, and a very warm welcome to our lecturer, Sir Ahmad Fauzi bin Abdul Hamid, as well as our fellow peers. We are from Group 2 representing our team members, Angelina Charles Tio, Nur Ashura, Nur Karun Atika, Izrin Fitria, and Nur Eldina Rakwisha. Today we will be delivering our group presentation for FIN562, focusing on a comprehensive portfolio strategy and technical analysis. Our evaluation spans across 5 distinct corporations. First, Hume Cement Industry Berhad. Second, Inari Emerton Berhad. Third, Notion Vitek Berhad. Fourth, MN Holdings Berhad. And finally, MISC Berhad. We will guide you through the momentum indicators and strategic outlook for each these holdings. Let us begin with our first analysis.
Hello, my name is Angelina Charles Teo, and today I will be presenting Hume Cement Industry Berhad, one of the companies selected in our portfolio. Hume Cement is a Malaysian company that manufactures and supplies cement and concrete products through its subsidiaries. It also owns an integrated cement plant and limestone quarry in Gopeng, allowing the company to control its production process efficiently. We selected Hume Cement because it has strong exposure to Malaysia infrastructure, construction sector, providing long-term growth potential while also helping diversify our investment portfolio. So for the first technical indicator is rate of change, or ROC, which measures the strength of price momentum. Based on the chart, at the beginning of 2026, the ROC rise above 15%, showing strong buying momentum as the share price increased rapidly. However, after reaching its peak in March, the ROC fell below zero, which indicates the bearish momentum had taken over. Although the price stabilized during May and June, the latest ROC remained at negative 3.92%, suggesting that the momentum is still weak and stronger recovery has yet to be confirmed. For the next indicator is Relative Strength Index, which is RSI. It identifies whether a stock is at overbought or oversold level. In early March, the RSI moved above 70, indicating overbought condition. Shortly after the share price corrected as expected, during April and May, the RSI stayed between 35 and 50. It reflects weak market momentum. The latest RSI, which is at 38, it still indicates a bearish sentiment, but it is approaching the oversold level, suggesting there is possibility of a short-term rebound if there is buying activity increase. For the third indicator, which is MACD, it helps to identify changes in the trend and momentum. At the start of the year, the MACD remained above zero, confirming a strong bullish trend. However, after the stock peaked in March, the MACD crossed below the signal line, producing a bearish signal that was followed by a significant price decline. Although selling pressure has eased recently, the MACD remained below both the signal line and zero line. This means the stock has not yet confirmed there is a bullish reversal. Lastly, the stochastic oscillator measures whether the stock is trading near its recent high or lows. In March, both the K and D percentage line moved above 80, indicating overbought condition before the share price declined. During April and May, both lines fell below 20, showing the stock had become oversold. In June, the K line crossed above the D line, which is an early bullish signal. However, since both of the value remain 50, the recovery is still in its early stage and it requires further confirmation.
Next, I will be presenting my analysis on Inari Ametron Berhad. First, let me begin with the company overview. Inari Ametron Berhad is one of Malaysia's leading semiconductor outsourced assembly and test, or OSAT companies. The company mainly provides semiconductor packaging and testing services for the wireless communications and optoelectronics industries. It serves major global customers and plays an important role in semiconductor supply chain. I selected Inari for my portfolio because it has a strong long-term growth potential driven by the increasing demand for electronic devices, 5G technology, and artificial intelligence applications. As for the portfolio strategy, Inari also provides diversifications through exposure to technology sector while complementing other sectors to create a balanced investment portfolio. Now, I will explain the four technical indicators used in my analysis. The first indicator is the rate of change or ROC, which measures price momentum. From January to March, the ROC remained below the zero line, confirming a weak momentum as the share price declined. In April, the ROC turned positive and supported the strong price rally. Currently, the ROC stands at negative 2.64, showing that short-term momentum has weakened after the rally. However, the share price continues to consolidate around 2 ringgit 20 cents, suggesting that overall trend remains stable. The second indicator is the Relative Strength Index or RSI, which measures whether a stock is overbought or oversold. The RSI moved above 70 in May and June, indicating strong buying pressure. It has since fallen to 52.44, which is a natural reading. This suggests that the stock is no longer overbought and still has a room to move higher if buying interest continues. The third indicator is the MACD, which identifies trend direction and momentum. A bullish crossover occurred in late March and successfully signaled the beginning of the strong uptrend. Currently, the MACD reading is negative 0.016 with the MACD line below the signal line. This indicates that the stock is undergoing short-term consolidation, and investors may wait for another bullish crossover before entering the market. Finally, the stochastic oscillator compares the closing price with its recent trading range. During the rally, the indicator stayed above 80, showing strong bullish momentum. After the recent correction, it recovered from oversold conditions. The current readings of 66.67 for the K line and 56.46 for the D line indicate that selling pressure has eased and buying momentum is gradually returning.
Assalamualaikum and good day everyone. My name is Izri Fitria binti Harusham and today I'll be taking you through an investment overview of Notion Vitek Berhad, a precision manufacturing group listed on the main market of Bursa Malaysia. The company serves critical global sectors including hard disk and solid state drives, automotive and electronic manufacturing services or EMS. To counter Intech's market volatility, Notion Vitek Berhad employs a robust three-legs diversification strategy across this core industry to minimize concentration risk. Right now, they are aggressively pivoting to capitalize on the AI boom by ramping up production for SSD enclosure and investing heavily in the next generation HAMR technology for hard drives. Operationally, they are expanding their electric motor segment to cushion a general slowdown in consumer spending. To protect their bottom line, management has prudently introduced a 70% hedge on external forex exposure while tightly conserving cash for upcoming major capital expenditure. Moving on to the technical analysis, let's look at how the stocks behaved through the first half of 2026 across four key momentum indicators. First, rate of change. The 14-period ROC perfectly highlighted the velocity of the stocks. During a January spike to 0.59 ringgit, the ROC surged deep into positive territory, validating the breakout structural strength. Conversely, a momentum reversed into March. It plummeted well below the zero axis, warning traders to avoid premature dip buying before flattening out by June. Second, relative strength index. The RSI confirmed these exact extremes. It approached the overbought 70 level in early January, signaling an imminent reversal and dipped below the oversold 30 level during the March capitalization to 0.36 ringgit, indicating sellers were washed out. By June, it settled in a neutral 40 to 50 zone. The third one, stochastic oscillator. Serving as our timing tool, the stochastic compressed above 80% in January, giving advance warning of a bearish crossover. It hit exhaustion below 20% in mid-March and eventually balanced out between 40% and 60%. Finally, the moving average conversion diversion. This indicator provided the structural trend view. It showed crucial bearish divergence ahead of both the February slide and brief May recovery to 0.53 ringgit, with the histogram plunging into negative territory to confirm strong underlying selling pressure.
My name is Nur Karen Atika binti Aman and I choose MN Holdings Berhad. So MN Holdings is an S-market listed investment holding company operating as a core engineering partner in Malaysia. Their day-to-day expertise is heavily focused on infrastructure, utilities, and substation engineering. In short, they provide a critical shovels infrastructure across four major sectors such as power, gas, sewerage, and telecommunication. As they design and provide high voltage infrastructure and underground utilities, they are at the absolute forefront of the country's industrial boom. They are the main direct beneficiaries of three megatrends, namely the expansion of the national power grid, the shift toward renewable energy, and the exploding demand for hyperscale data center across the country. Now we get into the portfolio strategy. First is diversification. By investing in MN Holdings, we gain real exposure to the infrastructure utilities construction sector. This helps us hedge and diversify risk from a standard portfolio and being overly concentrated in sectors such as technology and financial. Next is the market capitalization. With a market capitalization of around 1,948 million, it sits comfortably as a fast-growing small to medium cap asset. This gives us the perfect balance between aggressive price acceleration combined with underlying financial stability. The third one is risk profile. MN Holding is a high reward momentum stock. Its growth is driven by a very strong and significant pipeline of project, meaning its price volatility is closely linked to healthy multi-million ringgit contract launch. Finally, portfolio synergy. This asset acts as an excellent growth engine during active industrial macro expansion phase. It acts as a perfect companion to low beta income generating asset as it allows us to balance aggressive capital growth with defensive dividend streams. Let's break down the technical indicator for the first half of 2026. First, we examine the rate of change. It is measured the percentage velocity of price movement to isolate momentum shift. In January and February 2026, the ROC dipped below zero to a low of nearly negative 10, mathematically confirming a short-term bearish correction and initial selling pressure. However, in March, the ROC aggressively crossed back above the zero line. This bullish surge signaled a major momentum reversal driven by heavy buying activity, sparking a sustained price rally. Maintaining a strong bullish position near 20 through second quarter, the latest reading of 17.74 proved that bullish momentum remained very strong. Next is the relative strength index. It is a momentum oscillator that tracks the speed and change of price movement to identify overbought or oversold condition. In line with the ROC, the RSI fell to 30 in late February, indicating that the stock was oversold and primed for a reversal. It then surged past in the critical 70 threshold in March and April due to exploding buying demand entering overbought territory. Throughout May and June, the RSI fluctuated healthily between 60 and 80, with a recent reading of 69.46, meaning it remained very bullish but was just below the overbought line, successfully avoiding an immediate decline. The third one is moving average convergence divergence, or MACD. It is a flagship indicator that highlighting the shift relationship between exponential moving average. Following a sub-zero downtrend early in the first quarter, March produced a classic bullish crossover where the fast MACD line broke sharply above the slower signal line and crossed into positive territory, moving the histogram bars above zero. Supported by positive histogram bar throughout the second quarter, the MACD is now at 0.134 and the signal line is at 0.124. This positive spread mathematically confirmed that the broader macro structural uptrend is fully intact with no immediate threat of a bearish reversal. Fourth is the stochastic oscillator. It measures the closing price against its high-low boundaries over a given period to capture immediate change in buying power. After plugging below 20 into the oversold zone in February, March saw an explosive crossover where the K% line quickly crossed over the D% line, and both crossed over 80. It locked itself above 80 for the most of the second quarter. highlighting prologue and sustained buyer dominance. Today, the K percent is at 97.92 and the dip percent is at 95.77, while the confirming the extreme strength of the trend. This near maximum reading signal overbought condition, warning us that a short-term price consolidation may be in the horizon.
Hi, my name is Nur Erlina Raiguisha binti Muhammad Mardi. Now, I will be presenting a comprehensive market and technical performance analysis on one of Malaysia's premier shipping giants, MISC Berhad. Let's begin with a quick overview of the company. MISC Berhad is a key subsidiary of Petronas, operating a massive fleet of over 120 specialized vessels for LNG, petroleum, and offshore oil and gas projects. Their highly resilient business model relies heavily on long-term time charters, which help them secure stable revenue even during economic downturns. As a result, MISC consistently distributes reliable dividend at a yield of around 4.9% annually, making this blue-chip stock a solid defensive anchor for any investment portfolio. Moving on to their portfolio strategy, MISC anchors its growth on four main pillars. First, safeguarding cash flows against market volatility through long-term vessel charters lasting 10 to 20 years. Second, modernizing their fleet by phasing out older vessels for eco-friendly, energy-efficient ones. Third, aggressively driving a green energy shift by investing in carbon dioxide carriers and dual fuel technology by 2030. And finally, maintaining a portfolio defense that acts as a safe haven dividend asset, contrasting the unpredictable nature of tech or construction stocks. Let's shift our focus to the technical indicators for the first half of 2026. Starting with the 9-period rate of change. In January and February, the ROC line frequently surged above the zero line, tracking consecutive new high and confirming powerful upward price momentum. However, as a market correction took over from March to April, the ROC plummeted deep into negative territory, providing an invaluable early warning for traders to avoid catching a falling knife. By May and June, the ROC began leveling off just below zero, signaling a consolidation phase where the speed of the price decline significantly slowed down. Next, the RSI indicator held a steady, balanced zone between 45 and 60 early in the year, showing healthy buying interest without overvaluation. Late February saw a massive volume spike that pushed the RSI past the critical 70 overbought ceiling, forcing the eventual price correction. Intense selling pressure in March sent the RSI plugging below the 50 midline, trapping the indicator into a flat, sideways range between 35 and 50 through April and May. Currently, the RSI sits at 34.58, while the immediate macro outlook remains bearish. Approaching the 30 oversold floor implies that selling pressure is exhausted, leaving the door wide open for a short-term technical bounce if fresh buying volume returns. Finally, looking at our remaining momentum indicators. The stochastic oscillator tracked extreme overbought level above 80% in quarter 1 before experiencing a sharp bearish crossover that sent it crashing below 20% by March. By June 30, it bottomed out an extreme low floor below 10%, giving patient traders a clear sign to look out for a new accumulation base to form. This outlook is perfectly mirrored by the MACD. Following its peak ceiling of 0.1 in March, the blue MACD line crossed below its orange signal line, printing a prolonged red histogram. The MACD line currently sits at a declining negative 0.123, well beneath the signal line of negative 0.088, with a red histogram value of negative 0.034. This signals that short-term selling dominates the stock, and the safest strategy for traders right now is to wait on the sideline until the blue line flattens out or execute a clean bullish crossover.
Lastly, for overall portfolio strategy, to conclude, our portfolio strategy focus on balancing long-term growth with effective risk management. Among the 5 companies, we recommend buy for Inari Emerton Berhad because of its strong growth potential driven by AI and semiconductor demand. For Hume Cement, Notion Vitec, MN Holdings, and also MISC Berhad, our recommendation is to hold. Although these companies have a solid long-term fundamental, some technical indicators still show a weak momentum. Therefore, holding 4 of this stock and waiting for stronger bullish confirmation is the most suitable strategy. Overall, this balanced approach helps us manage risks while positioning the portfolio for sustainability long-term returns. Thank you. That's all for our video presentation.